Welcome everyone. Today we're diving into why around 50% of Singapore buyers are opting for new launch properties, what some call air, but really it's a strategic play.
I'm excited to get into this. It seems counterintuitive at first. Buying something that doesn't physically exist yet.
Exactly, it's like you're buying a blueprint for future value rather than just a property. And at its core, it's all about structure and mechanics.
Right, so the mechanics really take precedence over just, the physical asset.
Definitely. The initial advantage comes from a progressive payment structure, which dramatically reduces the capital strain. Instead of financing the full loan from day one like in a resale, you pay as construction milestones are met. Foundation, framework, TOP.
Yep, and by doing that, you avoid the immediate interest on the full loan, right?
Correct. So you get the benefit of gradually servicing the loan, which is a huge plus for investors who manage multiple properties. It's a bit like easing into a workout rather than diving straight into a marathon.
That's a great analogy. Even if you might say it's riskier if the project delays, isn't it?
Well, true. But that's where the structure comes in. It's kind of, calculated risk, right? The progressive funding not only eases cash flow, but the fixed pricing from developers also eliminates the cash-over-valuation risk you face in the resale market.
Exactly. Fixed prices are a relief. So there's no sudden cash injection required, because you're not paying more than the property's certified value.
Precisely, no COV, which means there's no nasty shock later on when the cash outlay can't be financed. It adds predictability to your capital planning.
That kind of predictability is a rare commodity in property markets.
And then there's what many call the top effect. Once the development reaches its temporary occupation permit, things shift. Buyers can, finally move in or rent it out. Banks release the final loan, and the pricing usually ticks upward. It's like the project comes alive.
Right, I see. That upward shift, is that what essentially compresses the uncertainty discount?
Exactly. The discount that compensated buyers for waiting often fades away. But it's important to note, it's not a guaranteed burst in profit. It's more of a recurring structural pattern that adds value over time.
Now, how about the timing with seller stamp duty? I've heard that's another factor in favor of new launches.
Oh, definitely. With resale properties, your SSD clock starts ticking right away. But in new launches, because the project often takes around 3 to 4 years to complete, by the time TOP is achieved, the stamp duty period is largely over or about to be.
That synchronization is quite strategic. It almost gives the buyer a natural exit flexibility if they want to sell soon after TOP.
Exactly. It eases the pressure on a forced sell, aligning well with the overall capital structure strategy.
And what about modern design? I heard that new launches really cater to current tenant demands.
Yes, that's a significant point. New launches come with efficient layouts, smart home integration, co-working spaces, energy efficiency, and lifestyle facilities. A clear contrast to older units that might have stuck with outdated designs.
That's a major tenant appeal. So not only are you getting a property designed for today, but you also reduce the time it takes to secure a tenant.
Exactly. This design aspect, along with the 1-year defect liability period new developments usually come with, reduces immediate repair worries. For an owner-occupier, this means fewer surprises post-handover, and for an investor, it safeguards the rental returns in the early stage.
It's like getting an extra layer of warranty just by choosing the new launch route, right?
Absolutely. And speaking of protection, marketing momentum is another strong driver. New launches benefit from highly coordinated marketing. Think showflats, media buzz, and that launch weekend urgency. It drives up initial take-up and reinforces a positive market sentiment.
That's a powerful psychological boost. That collective excitement can really amplify the pricing strategy, right?
Yes. Developers often use tiered pricing phases. Early buyers get in at a lower price, and as momentum builds, prices are adjusted upward. It rewards early commitment and creates an orchestrated price discovery process, which is hard to achieve in resale transactions.
It's a very disciplined method, almost like a self-reinforcing cycle of growth.
Exactly. Now, there's also the lease aspect. Singapore property is mostly leasehold. With a new launch, you get a fresh 99-year lease, which in turn improves liquidity down the road. Resale properties might have, say, 20 to 40 years eroded, making financing and buyer eligibility trickier.
Yeah, lease freshness really keeps your options open. That added liquidity likely makes these units more attractive, both for hold and for eventual exit.
For sure. And let's not overlook portfolio leverage. The progressive payments allow buyers to enter a second property even before the first is fully drawn down. It's a staggered exposure that provides better asset progression opportunities.
Timing and leverage really are key. But you know, there are critics out there who call this approach mere speculation, right?
Right. Some critics label it as such. However, experienced investors see it as structured strategy. Buying air isn't about fancy brochures. It's about, structural clarity. It's a calculated decision based on factors like entry pricing relative to future demand, capital efficiency, exit liquidity, and regulatory alignment.
I get that, but don't you think there's a risk of, say, delays or issues with the developer? That can throw off the whole structure.
That's a valid concern. Due diligence becomes absolutely critical. Evaluating a developer's track record surrounding transformation plans, competition from future supply, and the projected exit audience in 3 to 5 years has to be part of the process. So it's not blind optimism, it's rigorous, fact-based decision-making.
Yeah, that makes a lot of sense. So it's really about understanding the mechanics, not just being swayed by marketing gloss.
Exactly. The notion that you're buying something intangible is misleading. In reality, you're buying time, structure, and positioning. It's a strategic move to manage risks and maximize efficiency in a market that rewards thoughtful, patient planning.
Right, when you peel off the marketing layer, it really boils down to smarter financial planning and leveraging.
Absolutely. And for owner-occupiers, the benefits are different yet complementary. They get brand new interiors, warranty coverage, and modern communal facilities, which reduce the friction of moving in and the fear of renovation surprises.
Exactly. That emotional certainty can be a big factor. It's intriguing how both investors and owner-occupiers can find tailored benefits from the same strategy.
Yes, that's the core principle. Structure over sentiment. It's about basing decisions on clear-cut mechanics rather than just gut feeling or visible finishes, which are only part of the story.
And that clarity minimizes mistakes that come from misjudging the fundamental financial mechanics.
Precisely. New launches may seem like buying air, but in truth, you're buying a whole package deal of calculated risk, liquidity, and a chance to capitalize on market trends when they materialize.
Very strategic indeed. I appreciate how this discussion cuts through the hype and really points to why, in financial terms, these new launches can often outperform older resale units.
Exactly. It's not about marble finishes or immediate aesthetics. It's the deferred full leverage, coordinated marketing momentum, and the pristine lease freshness that set them apart. This, along with our due diligence in understanding the driver mechanics, makes a compelling case.
Right on. Very compelling. In the end, it all circles back to making decisions based on structure, minimizing complexity while maximizing strategic positioning.
Absolutely. And for anyone evaluating a new launch, remember, the decision framework should evaluate entry timing, cash flow exposure, and long-term exit strategy. It's the mechanics that bring confidence in the property market.
Couldn't agree more. Well, this was an enlightening dive into why buying air in Singapore isn't reckless at all, but rather a smart, structured move.
Exactly. It's all about understanding and leveraging the structural advantages. If you're ever considering a new launch, take a step back and look at the mechanics. It's a strategy built on time, structure, and smart positioning.
Thanks for this deep dive. It's given me a lot to think about regarding property investment strategy.
My pleasure, and thanks for joining the conversation. Remember, it's not just air, it's a calculated pathway to future value.